Welcome to Classic Valley Investors. My name is Mariusz Konieczny, and today we're talking Scorpio bulkers with Robert Bugbee, but we will also touch a little bit on the oil tankers. So, Robert, thank you very much for joining me today.
Thank you, Maris.
So, you run more than one company. We know some of the people that listen to my channel know you as the president of Scorpio Tankers, but you are also involved in Scorpio Bulkers. Can you take a maybe few minutes and explain to my audience like the difference between these two companies or different markets, what they do, how they differ, and things like that?
Sure. Pure Tankers is owns product tankers, clean petroleum product tankers, so carries all refined products and vegetable oils. And Scorpio Bulkers carries um, hard commodities and soft commodities. So it carries um, cement, bauxite, steel products, grain, soybeans, etc. And those are the fundamental differences between the two in what they carry.
And it's I've been watching the dry market for a while, and well, recent while, I guess, and something significant happened to the rates recently, and I guess it took some people by surprise because, as we know, the COVID situation and the slowdown in the economy, and people like to say, well, it's impossible. It's impossible for rates to actually go up in this kind of environment. Yet on the dry bulk side, they did go up. So can you talk a little bit about that?
Sure. Well, first of all, the dry bulk sector was affected really hard at the beginning of the um, COVID-19. So back in December, you can see it on the stock charts too. The dry bulk market already started selling off, and as you know, partly because of the first quarter is generally a seasonal weakness, but also now I guess it was anticipating or feeling the early by the time it got to January, the early development of the virus in Asia, and the majority of the demand for dry cargo in the commodities, whether it's food or building commodities, etc., is to Asia. And we export from South America, whether it's grains, etc., or iron ore, import to Asia. That's quite typical. Or export grains from the Black Sea, importing to Asia. And the dry cargo market reacted instantly to slow down in demand and ports shutting down in Asia and ports then shutting down in Europe. And the rates got down to at one point the Baltic index was at a all-time low. And then what happened is that Asia started to recover, open up one country at a time, and then it's followed by Europe. So the actual United States isn't that important for the dry cargo market itself. Yes, it exports some grain, but so does South America, so does the Black Sea. Soybeans, ever since China, the U.S.-China trade sort of friction. Soybean has been coming out of Brazil and South America. So as soon as the economy started to pick up, then the volume of cargo started to be traded more in the dry cargo market, and then suddenly you reached a point where there was enough volume and the markets literally across all spaces in dry cargo moved up very sharply, reflecting the changes in demand and the opening up of economies primarily in Asia. And all trades, all size ranges have moved up very steeply in the last, I would say, 3 weeks. Rates have gone up somewhere between 3 and 5 times, depending on what route the vessels were on. They've moved from operating cash losses to, covering all in positive cash. Vessel values that had been sliding up until 3 weeks ago across the board have moved up at least 10%. So that means that everybody in that market is feeling good now. They're feeling good for a couple of reasons, that with the third and the fourth quarter are normally the strongest, and that inventories, there are no storage, there's no dry cargo ships to work off in terms of excess storage capacity on the water, and there are no onshore inventories such as iron ore in China are at quite low levels too. And the world Asia population continues to grow despite COVID-19. Living standards in India, China, Asia have increased, so they're taking more grains in their diet compared to rice, and grains have to be imported, and growing populations have to be housed. And then on top of that, you're getting the supercharged position now of all the stimulus that has been put in by the central governments in Asia too, to counteract and get the economies moving,
Yeah,
with the virus.
yeah, it's interesting. You mentioned uh, the 10% vessel values to the upside because of the tripling in the rates, and I find the situation fascinating because just a few weeks ago, no one in that space could see the light at the end of the tunnel, and then all of a sudden, boom, something happens. Rates go up 3 times, like you said. Vessel values go up 10%. But looking at some of your competitors, the stock prices, some of them doubled in such a short period of time, and it just shows you, what can be done when one person has the courage to invest during times where there's not a lot of visibility and a lot of uncertainty, and yeah, that's what can happen.
Yeah, I would also add that one of the biggest differences in dry cargo compared to tankers is that most of the vessels are actually held in private hands, and these very strong private owners, some of them are billionaires many times over, and they don't even worry about borrowing; they just pay cash. They have been actively interested in buying the dry cargo vessels and looking for deals. People who might have wanted to sell and had different views or weaker balance sheets now for the last 2.5 months, and they've been nibbling at the edges, and simply they foresaw that at some point or other, not necessarily this summer, but at some point or other, the cargo market would recover, that the world would get past COVID-19, and that all this stimulation, the Asian economies would help the dry cargo market. Now, what has happened, obviously, is that the rates have moved up. So, you know, sellers don't, sellers don't need to sell, and buyers can afford to pay more. These are substantial changes in cash flows, especially when interest rates are very low, and alternatives to keep money at the bank is you're not getting paid much just to keep cash at the bank.
Yeah.
So
Uh, so as I mentioned before, looking at some of your competitors, and the stock prices have done pretty well over the last 3 weeks. But looking at Scorpio bulkers, this hasn't been the case. Do you think this is because you guys did, equity offering?
Maybe it's also technical because I think all of the dry cargo stocks haven't done as well in the last week or so as they could have done. All of them have been surprisingly weak, and I think a lot of this was technical in the sense of rebalancing on the Russell. It had been a poorly performing sector going into the end of the quarter, so some people would have been exiting. So I think that they've traded at fairly, not very high volumes into that, and I would, I would expect that, here you've just got something that is ultimately very powerful at the moment, which is this combination of positive cash flows and rising asset values. I mean, if we think about it, many of these dry bulk companies are over 65% leveraged. So if you had a movement of 10% in asset values, then that's a 30% increase in net asset values. And most importantly, if you have changed your cash flow from a negative operating cash to all in positive cash flow, i.e., instead of taking money from the shareholder, you're now adding to the shareholder's value. These are the tremendous changes that is happening, across the dry cargo fleet. And what I think is important to recognize is that there are literally thousands of dry cargo ships. This is the biggest market there is in shipping. It's not one trade route or one commodity that is leading to rates moving upwards. There are differences within the companies, however. I mean, you have to look going forward is that, Scorpio Bulkers, I think to any new shareholder is a fantastic, proposition right now because, the equity issue to strengthen the balance sheet has passed. So, dilution risk is minimal. Insiders have backed up their investment position. And most importantly, the fleet is the youngest public fleet on the U.S. markets, and it has all spot fleet. The fleet is spot. Some of its competitors chose to, fix vessels, fix vessels on time charter, and have taken away their upside going forward, or even worse than that, have entered into freight futures contracts, which are derivative contracts. So probably with the increase in the market, they would be getting, cash calls too. But I think that, I think this we put our money behind this. We think this is a great opportunity.
Right, and that obviously the biggest disappointment that I am hearing from investors about Bulkers is the equity raise. Before the equity raise, I know that Scorpio Bulkers had shares of Scorpio Tankers, and you sold those shares at a profit to strengthen your balance sheet. And I guess people thought that this was going to be enough. Yet you did also come out with the equity offering. Now, some ask me why. So could you talk a little bit
Sure.
about more that? Like, did you need more liquidity? What was the purpose simply of that equity raise after you already had money from the Scorpio Tankers? No, yeah, Scorpio Tankers shares.
Well, first of all, we saw, a situation where you had an unclear market. You still have an unclear market. We don't know whether, COVID-19 comes back or how it's going to attack. We don't know, whether or not you're going to get a short-term boost or a long-term boost. That, we ourselves in our holding companies, had cash, and we chose, along with the number two shareholder in the company too, that the better thing to do here was to, stopped selling assets. I mean, we'd sold a bunch of assets to hold the Scorpio position. We believe a lot in Scorpio going forward. We think that the setup in the product market is just getting, better and better despite where the stock price is. And we wanted to create a situation where we had the strongest runway, the strongest balance sheet that there was in the industry as well. So we simply, for us, it wasn't dilutive because we went along with our investment, and all we did was turn a let's say an option into an investment vehicle. Um, that means that in the worst case, if the markets hadn't responded, we would have lots of runway and be able to see it through until when the world had got past COVID-19. And in a optimistic case, which may well happen much quicker than anyone would have thought because of the ferociousness of how quickly and how steeply the dry cargo market has moved up, the company may have surplus liquidity very soon with which it can reinvest. So I can understand that there would have been frustration from some people who had not participated in the offering and had been diluted, but that they could have the option to buy the shares. They've explained that you've created a much more solid investment. You've got masses. You've got, even after the offering, you've got such a lot of gearing to the upside. I mean, the company has, as I said, have an entirely spot fleet, plus it has, it still has a very good gearing to an improving, price area relative to NAV.
Yes. Okay. Thank you for that. Um, and one other thing that I wanted to ask you about the bulkers is your company specifically focuses on the mid-size segment, Ultramax and Car Kamsarmax vessels, as opposed to
Panamaxes,
the
yeah.
Capesize. Can you talk about this? Why?
Yeah, we think over time that the diversity of cargo size will be beneficial. The of the cargo types. I mean, our vessels carry, as I said, virtually all of the soft and hard commodities, whereas capes are really tied to one commodity, iron ore, and predominantly, over 90% of their carriage is iron ore, and two trade routes, Brazil to China or Australia to China. And sometimes that goes very well. Other times that goes very poorly. Even this year we have had many times where in poor times the smaller vessels actually, because of their diversity, trade better in terms of cash flow than the big capes do. Now, at the end of the day, in the end of the day, that one could also look, and on a factual basis, that sort of those differences are much to do about nothing, really, because if you go back in time, the stocks and the markets themselves may, from time to time, dislocate for a couple of weeks, or 3 or 4 or 5 weeks, but ultimately, we haven't yet seen a time where the small ships have been doing great and the big ships haven't been, or we haven't, or vice versa. The big ships are doing great and the small ships are doing terrible. Over time, they all move up and down in the shipping tides together, and there is a even correlation on the paper market. Very often, if the Cape-size paper goes up and creates a gap to the Kamsarmax paper, then you will find that people play the arbitrage there, and they will play that spread itself by selling the Capes and buying the Kamsarmaxes, or they will just get long the Cape market too by buying Kamsarmaxes. So what I would say generally to the investors is that, you know, I can identify the differences, but in terms of an investment, we haven't yet seen the time when they don't move up and down together. What matters more is whether a company is how it's leveraged to the spot market, whether or not it's what its gearing is, financial gearing, its ability to return capital to shareholders promptly, its capex, and whether or not it has a spot fleet. I mean, you don't want a fleet on time charter if the rates are moving higher.
Yeah, that's right. Okay, when we talked about the tankers, we talked about the order book and then the various age limits. How does the order book look like on the bulker side, and also are there any age limits to those vessels?
Uh, the, the order book in the dry side is better than it's been for a long, long time. I mean, especially the smaller sizes. I mean, the smaller sizes now are down to about 6% of the order book. 6% of the fleet is on order. The Kamsarmaxes are about 8, and the larger sizes, which we don't have, are a little bit higher. Which again is one reason why we technically like the smaller sizes at the moment. And there are, over 10% of the fleet is over 20 years old. They do have longer lives. It's fine to dry bulk. They do trade dry bulk ships when they're over 20. Financially, though, today it's becoming a little harder because you've got to pay capital expenses out for ballast water treatment systems, and you're also going to have a fuel guzzler in a time when it's not good to be burning a lot of fuel expense for financial and environmental reasons. So people do start scrapping once you get to 20. Now, so in historical terms, they're in a good place, and I think that's one of the attractions to the investment. They're not nearly as good a place as the product market. I mean, the product market is really unique across shipping in the sense that this has this 15-year limitation on the premium trades, and there are frankly more ships becoming 15 years old over each of the next 4 years than the highest year of new building deliveries that we've had in the last 5 years or even going forward. So I would say the supply sheet, new buildings, age profile is good to excellent in the small and mid-sized dry cargo sector, but not as fantastic as it is in the product center side.
Okay, so I wanted this interview mostly to be about Scorpio bulkers, but I know that people are itching about getting your take as the last question on the tankers. What's happening there? What's happening with Scorpio tankers? Are you worried about the balance sheet, rates, and things like that? So in conclusion, can you just update people
Sure.
on that market?
Sure. We've recently given rate guidance for, closing out on the second quarter, which any way of looking at it is going to be a record quarter. Tremendous build of cash in that quarter. We also gave rate guidance that despite the third quarter starting off, much weaker than that second quarter, the third quarter actually is starting off much stronger than it did in 19, much stronger than it did in 18, and it started off also in positive cash. So not worried about the balance sheet at all in that sense. And we're really encouraged. We've said many times that we much prefer a situation long term where we get some pain in the spot markets due to destocking, due to vessels being returned from storage in the markets because the world is opening up and demand is getting better, and we avoid a depression in the world economy, than to have a false situation where we're earning lots of money because the world is suffering. So we're greatly encouraged by the speed that the destocking is happening at sea. We're already seeing futures curves for the fourth quarter, November, December, being higher than what people are anticipating, what they see the market as today, or anticipating in the third quarter. Even the bearish, the most bearish analysts, if you ask them related to what they think is going to happen, then they will tell you that they expect the fourth quarter to be better than the third quarter. And we empathize, and with management to big investors in Sting too, with the actual stock price itself. But in terms of the fundamentals of the market and the fundamentals of the company, it's great. And this is you're certainly not going to see Salt as a seller of Sting shares, because the fundamentals of Sting are looking very good now, going forward for multi years of good markets, we hope.
Yeah. Okay. Thank you for that update. Yeah, I don't. I
But
don't.
but I do. I mean, I really do. Sympathize with people on the actual stock price itself. I mean, there's a huge dislocation between what is happening. Um,
Yeah.
and
Well, I mean, we went
but
from.
I think the catalyst for the market will be the rate change. Once people figure out that the next change in directional change in product rates will be upwards, then I think that once that's been confirmed, then the stocks will really start to move, and move very hard. With Sting leading the pack, rather the same as what you're seeing here with dry. Once if we have this for rates for, the analysts have said nothing yet on the dry cargo, like almost zero. Nobody's approached it. But if we carry on with a market that's constructive like this, and we get into earnings season for dry cargo, which starts coming in, the first companies reporting, we're only 4 or 5 weeks away, then I think the analysts will then change, and we'll get a confirmation. And I would expect the same type of thing to start happening in the tanker market, in 2-3 months. I mean, there's a old rule in investing in tankers which says, you buy in, you just buy in July, just buy in July and early August, buy during its weakest period, which is normally the third quarter,
Okay.
in anticipation of stronger times in the winter.
Yeah. Okay. Well, thank you, Robert. I don't have any more questions. Any final thoughts?
No, I just hope the world can, from where you started. I think it's important in dry cargo to understand that the rates and the markets are a non-U.S. focused. So we can see the U.S. go backwards a little bit in closures, or et cetera, and it won't affect the dry cargo market really much at all, as long as we're not, stepping backwards into a world recession.
Well, okay. Well, thank you very much for your time.
Thank you very much.